So Caitríona, our summer 2023 Irish Tax Review article is now available, and it's focused on tax authority technology. Putting yourself in the shoes of a client, what do you think is most relevant?
Well, I think from a client perspective, when they think of technologies within tax authorities, they immediately think of real-time reporting. And it was really successful, especially with the introduction of PAYE modernisation in 2019. And I guess there have been a few introductions from there, and one of them being an introduction in 2024 is the enhanced employer obligations in respect of expenses. And it's really asking clients to report in advance of payments of specific expenses to employees. And as well as that, clients should consider, I guess, what IT advances they need to make to support that real-time reporting, or as well as that, do they need to consider expense management software to support that reporting. And I suppose another big ticket item will be VAT modernisation. There's huge advances coming, and it's going to digitise across all European countries, and processes across all aspects of a client's systems should be considered, not just those in finance processes. So again, it's in support of these technology changes that revenue are really getting on board of, and clients will have to do the same.
I fully agree with that. The enhanced employer reporting one, I think, is going to be a real challenge. As you said, PAYE modernisation was very successful, but that relied on a limited number of payroll software vendors, and once they got the interaction with revenue right, it was really, really smooth. Expenses is different. Some people do it manually. Some people have it built in bespokely into their systems. And so there's going to be an awful lot of more work for an awful lot of people in terms of correctly categorizing the expenses that do need to be reported, because not all need to be reported, and getting that right and getting them into the right categories, and doing that every single week before you pay an expense claim is going to be really, really challenging for some, not all, but for some. From my perspective, from researching the article, the piece that I found most relevant was the trends in revenue audits. So we've seen a trend of audits declining, number of audits declining from over 5,000, say 5 or 6 years ago, to around 1,000 now, a little over 1,000. Some of which is COVID related, but they were down to about 3,000 pre-COVID. At the same time, the yields have been increasing. So they've really skyrocketed in the last 2 years, but even before that, the yields had more than doubled. So I think we're seeing technology, better selection, revenue targeting, their audits better, and then within those audits, better use of technology, so better use of their e-audit type technology in terms of then delivering yield, which so in one sense, less audits is good from a taxpayer perspective. On the other sense, increased yield is obviously bad. It's that revenue are delivering such a high yield out of the audits they're doing.
Yeah, definitely, and trends that will definitely pique the interest of our clients.
Listen, thanks very much. That was really insightful and a lot of things for people to consider.